Hello, my name is Mike Swanson. I run the website wallstreetwindow.com, and the odds are you're watching this video because you got an email from me about it by being on my free email list. Now, if you're not on my email list, you should click the link associated with this video to subscribe. And if you're randomly watching this on YouTube, click the subscribe button on the YouTube channel or the YouTube video, and that little bell, that alert bell, because then YouTube will send you an alert of their own the next time a new video is posted up. Because we're in an interesting moment right now. The stock market today is getting hit hard. It's almost 3 o'clock, and I checked a few minutes ago. The S&P 500 was down over 80 points. What is going on in the market? You must answer that question to know whether you should buy immediately or if you should wait. Why is this happening? And on one hand, it's a continuation of selling we saw last week. After the Federal Reserve meeting, the stock market got hit hard Thursday and Friday. On Friday, Apple, Tesla, Facebook, they all closed below their 50-day moving averages. Those are three of the most popular stocks that people are trading right now. But the Nasdaq 100 closed below its 50-day moving average. The S&P 500 did the same, and the Dow did the same too. That was a short-term break of support. We had, coming into that 3-day action though, a drop earlier this month to the 50-day moving average, a bounce that ended on the Fed meeting, and then a fall through that low set earlier in this month. So this selling is something that started roughly 3 weeks ago. And if you look back on what happened before the selling started, then I think we can see the real reason for the current weakness in the stock market. Now, hopefully there will be some sort of bounce. There should be some sort of bounce this week, and I'll show you why and then what we can expect afterwards. I got to show you some charts though, so you can see what I'm looking at. On my website, on just a few days ago, my computer, I'm sorry, computer froze up on me and acted crazy. That's why I hesitated. But okay, a few days ago now, on Friday morning, I did a post explaining something, why the market was falling. And to show what's going on, I put up this chart of the Nasdaq 100. Now, you can see it's been going up since 2009, but there have been dips of 20% in 2010, 2011, or almost that much. But 2015, there's a 20% dip, 2018, a 20% dip. This year, a much bigger one. The S&P 500 fell over 33%. But what's really noteworthy is that the Nasdaq triple Qs, which reflects the Nasdaq 100, it fell to 160 in March and then rallied up to just about 300. In other words, it went up about 75% in 6 months, a very short amount of time. In fact, the rate of change indicator showing the changing prices over 90 days hit a record not seen in 30 years. So the point, simple point, is that a move that fast, 75%, in just a space of a few months, is not going to repeat over and over again without a pullback or at least a period of sideways action in the stock market. The move was simply unsustainable. So we are now at the moment we are at in which the market is pulling back. That is what is going on. That is the reason for the current weakness in the stock market. As simple as that. Now, if we look at a chart of the S&P 500, I just want to point something out to you on a short-term chart. The indicator at the top is a stochastics indicator. This is a technical indicator measuring overbought, oversold readings on pure price action. This is an hourly chart. It's oversold on an hourly basis now. The market is falling bad. The last time this happened was after the market made its peak right after Labor Day, and the S&P 500 fell really hard, the Nasdaq fell really hard into September the 8th. This indicator, the market then had a one-day bounce, and then let me put it this way. When that indicator last got oversold, the market entered a range of roughly 3,300 on the S&P 500 to 3,425. So an oversold reading now, which is what we're at, sets us up for a bounce this week that will most likely be another range, much as we saw into the Fed meeting. So that's where we're at in the market. Well, okay, if we're oversold, should you buy? If you're a nimble day trader, if you have a computer trading program that enables you to answer that question without watching a video like this, maybe you should. But otherwise, I think this is the time to be very cautious in this market. I know there's a lot of new people to trading these markets who've gotten in for the very first time, opened up trading accounts for the very first time since March, and they're not used to an environment like we're now in this month. They think that this giant move up is what to expect all the time, but that move ended right after Labor Day, and now we're in a sideways to down trend in the markets. And it's best for most people, when it comes to the U.S. stock market, the popular stocks, to just step back and don't try to guess the bottom yet. Because look, we're broken down. The S&P 500's next support level after some oversold bounce here, which hopefully will happen. No guarantee this week, but to me, it doesn't matter. I don't think that's going to be the real bottom, because the next support level is the 200-day moving average at 3,100, essentially. And then below that, you got a 20% decline from the high, which takes us down a little bit below 2,900. These levels could easily be seen. It's nothing for a market to retrace 1/3 or 50% of the gains after having a big rally like this. And at this point, there are other things trading less volatile than the stock market that have the better potential to go up more over the next couple of years. I'm thinking primarily of precious metals here. When the S&P 500 fell 30%, gold in March, gold fell about 10%. Gold is outperforming the stock market. That's why I think it's a better investment, at least to have some money in gold, silver, and mining stocks, be in the leading stuff. But that's probably a topic for another video. I just want you to know, why is the stock market pulling back? That's the important thing to understand right now. And the stock market is doing this simply because it went up so much in such a short amount of time, from the March low after what was essentially a crash to this Labor Day. Another 75% gain from that, from now to January, is just, the odds of that are so low. That means that the market environment is sideways to down now, a completely different environment than we were in before Labor Day. And that's what you have to adjust the type of trades you're doing to. And really, the simplest thing to do is step back and let this decline, which could easily go on into the election, because there's so many people worried about the election right now, one way or the other, that, it's kind of putting a damper on stuff too. So just step back, be cautious. Don't there's no need to take giant risks in trading. There's no need to be in a hurry. There were people who saw the stock market rally last week on Tuesday and thought they had to jump in, who now got hit. There's no reason to buy if the Dow was to go up 500 points on Tuesday. Just be patient. Let this pattern play out. Let a sideways consolidation or a correction play out, and then pick your spots. Figure out what is falling less than the stock market, because that has a tendency to go up more than the market averages. To beat the market, you want to buy the things beating the market. It's as simple as that. And those aren't things that fall as Tesla did at when it made a high the other week. It's certainly not stocks like Nikola, which is already down 50% from the high. This stock has crashed 50%. You don't want to get into crashing stocks to beat the market. So anyway, this is what I wanted to show you, talk to you about today. Just remember, why is the stock market falling? That's the most important thing to understand now. It's falling because it went up so much in such a short amount of time, and the momentum ended, and here we are having to let this current process play out, and we'll talk about it more as it unfolds. So again, like this video so I know you're there, and click the subscribe button and that bell to get my next video update. This is the quickest way to do it.